Hi, I'm Aperture, and in this video I'm going to show you how you can view liquidations for free in the cryptocurrency market. A liquidation in a financial market is when somebody closes a position, whether it's long or short. But we're talking about this video about forced liquidations. A forced liquidation happens in a futures contract when the position losses are higher than the collateral or margin required. Exchanges take the position over and have to sell or buy it to remove the risk. So basically, when a liquidation happens, somebody gets stopped out and that creates selling or buying pressure. We can use that information to enter or exit positions. At those levels where liquidations happen, there is a lot of liquidity that we can use. So in this video, I'm going to show you a trick how you can use that information to enter or exit positions. Let's start with BIPT. BIPT shows you the total liquidations from the last 24 hours. It shows it for 1 hour, the 4 hour, the 12 hour, and the whole day. You can also view the symbol liquidations, so the total amount liquidated, and also the exchange liquidations, so per exchange. And then there are some charts about total liquidations, historical liquidations. What's important to know is that you'll have to track this over time and see where there are lots of liquidations happening, because that means a lot of market participants are getting stopped out. So it gives you some insight in what's happening in the market and whether a lot of people are stopped out. If it's, for example, long liquidations, that means a lot of people who were long got stopped out. You can basically use that information, and maybe that's where you buy the dip, because maximum pain has been reached in the market, and that's where you can enter. But we can also do this for individual charts, and for that I'm going to use coinalyze.net, and coinalyze.net has a lot of charts, but we have to go to the individual charts in the futures data to see the liquidation charts for each coin or instrument. You also have the open interest charts and funding rate charts, but we're mainly focusing on the liquidation chart. So you can pick the coin of your choice, the coin you're trading, the coin you want to trade, and view liquidations. So this is the chart for Cardano on Binance. It's Cardano USDT, and it shows the liquidations below. As you can see in this chart, there have been liquidations over here, and there have been liquidations over here. It shows you that at this level, a lot of people were stopped out, and those stopped out traders were basically on the long side. Price went down, they got liquidated, stopped out, and as you can see, price reversed. Often when a liquidation happens, the market is out of balance or tries to find balance afterwards, and that's what you can see here, is that price can bounce after a big chunk of liquidations, and you can basically try to long this and try to catch that up move. So this is a very short-term play and a very scalping-like strategy if you want to catch those. And as you can see, liquidations can happen on both sides, because also over here we can see that shorts were being stopped out. Also add your own technical analysis with this, because of course you can try to short or long every liquidation. As you see here, price basically is still moving up a little bit, and after that too. So make sure if you scalp something like this, you take profit quickly and manage risk quickly. But the more liquidations happen, as you can see here, the more likely it is that there is some kind of mean reversion or a bounce happening. If you're looking for longer term plays, you can switch to a higher time frame chart and start to look for really big peaks in liquidations. And this is a little trick I want to show you. Some might understand the principle of divergence with an indicator. So price can be divergent when it makes a lower low, but the indicator makes another high basically, or is higher on the indicator. And I think that's often also how you can use these liquidations, because often when price makes another move down and there are less liquidations, that's where there's less strength in the market, less people getting stopped out, less liquidity to be got. That's when bounces happen, as you can see here. So it might be good to look for some of these liquidations and see if there is another move down that it has less liquidation, so you can long that up, for example. The same is true for the short side. As you can see here, price is making a higher high, but liquidations are making a lower high. So there is some divergence, and as you can see, price moves down from there. So also in higher time frames, you can use liquidations to see if liquidity has been taken or selling or buying pressure has been exhausted in this market. Thank you for watching this video. I'll probably do some more videos on liquidations or futures contracts later on. So make sure you subscribe and like so you can keep up to date with the Burp Nest.